No, I was thinking you last Violet. I don't know.
So how many of you have a chance to, read the chapter one, the smart work, or do some assignments, and kind of have a sense of what we are learning? Okay, good. Thank you. Anybody else? Awesome. Thank you. Great. Thank you. So good. So since this is new, I'll do a presentation, and then in the meanwhile, feel free to interrupt me, because probably every person is in a different place. And feel free to interrupt and share or ask questions, how it ties to your own business, right? That's how you learn, okay? So the objective is describe various organizational forms of business decision makers, right? Like we touched base on last session. And so we talked about the sole proprietorship. It's basically individual using yourself. Yes, if you are very small business, it's a good way. And partnership, 2 or more people together. And corporation is really you have a shareholder and formalize. So if you really want to do something serious, you probably want to do corporation. So with that said, anybody want kind of know what form of organization you want for your business and why? And you guys want? Anybody see what kind of organization you want? Yes.
I think corporation, like an LLC.
Okay, good. And remind me your business again?
Climbing gym.
Oh, climbing gym. Okay. Yeah, at least you need an LLC for sure to limit your liabilities. Yeah. And then, if you want a franchise and make it big nationwide, definitely a corporation, Yeah, so that you can raise funds and pay dividends to the shareholders. Good. Okay. Anybody else? Your flying business?
Corporation.
Corporation. Good. I like that. Ambitious. Yes, you want to play big. Create a brand, right? Become known nationwide. Okay. And the sports training team. Oh, that's okay. Sports training.
We're continuing cooperation as well. We build brands for sports specific related things. So just build a brand and then branching off that into each sport.
Awesome. Yeah, you probably depends on a lot of trainers. If you have a system to recruit and train people, right, and have a brand, I think that's awesome. Yeah, thank you. Yeah, and wedding.
Corporation.
Yes, you need to buy facilities. That's a lot of financing. Definitely do it formally. The medical device.
Corporation.
For sure. You guys are ambitious. I mean, the medical device world has been developing so fast. There's new technology coming out every day. So the ones that as obsolete for one hospital, maybe still very hard for at least a less developed regional hospital or other countries. Also. And there's another, the door-to-door home maintenance.
Yeah, I think we'd start as a sole proprietorship.
Okay.
Start small, just a local business.
Yeah,
Then
save
like
the cost.
as we expand, we transition into like a corporation.
Mhm.
So just sole, it's easier to set up.
Yeah.
Right? Like,
Low cost.
yeah, less cost.
Yeah.
And then yeah, as we get bigger, go to corporation.
Yeah, that's the most conservative way of doing business, right? You get your feet wet and test it, and see how it works, and you may try it and you say, okay, and maybe I want to change the idea and do something else. So yeah, instead of spending, $1,000 to set up all the legal things, you can start with sole proprietorship. Awesome. Thank you. Any questions? Comments? Good. So the accounting system, we have the operating system, the investing system, and the financing activities. And then we have the accounting reports, right? There's financial reports and managerial reports. So in this class, we're mainly going to focus on the financial part of it. So accounting is a system of analyzing, recording, summarizing, and reporting the results of a business activity. So every business activity can be expressed in financial terms because every business transaction will affect the finance. So really, I coach the executives and I tell executives, you must know some accounting. At least you need to understand the financial statements. And a lot of people say, no, Jinhong, my accountant will do it. I tell them, if you don't understand your finance, I can promise you, you will suffer financially in your life. Sometime in your life, you make a bad decision, bad investment, or whatever, personally and business-wise. So I always teach them the basic financials. You must know it. Even if you're going to be a marketing person, you must know accounting. Okay? Because you need to understand the finance and the flow. So there are internal users, the managers, supervisors, right? And then external users, the creditors, investors, to evaluate your business. So you need to learn how to describe the purpose, structure, and the content of the 4 basic financial statements. So the most simple one, asset equal liability plus stockholder equity. Right? So entity assumption, separate entity assumption, that business transactions are separate from and should exclude the personal transactions of the owners. So that's one of the things that's important as a best practice, okay? So I would request you to focus on learning, and if you needed to speak up, just speak up, okay? So thank you. So as you start your business, especially when you're starting a sole proprietorship, you tend to commingle business and personal. So the best practice is to have a separate bank account for your business, and then go through everything there. That way, you separate them, and when you file tax return, it's all separate. So assets is basically the present right to an economic benefit. Practically speaking, assets are a company's economic resource. Basically, what do you have? What do you have? You have cash. What do you owe? What do you own? Your cash, your equipment, your building. In your case, your bikes, right? Your backpack. And then liability is basically what you needed to pay people. Okay, so notes payable, accounts payable, salaries and wages payable, and tax payable. Okay. And then stockholders' equity. It's basically whatever it's yours, it's owners, and that's whatever you own minus whatever you owe, that's what's yours. Right, so it's asset minus liability equal stockholders' equity. And revenue is whatever money coming in. It's your sales proceeds. That's your revenue. And the expense is whatever you paid out to generate revenue. So it could be, advertising, employee insurance, rent, utility. So with that said, start to create your balance sheet, your own business balance sheet, your chart of account. Okay, like what revenue you can call sales, right? Lease, rent, expand, wedding, the fees we charge, and you guys, sales of products, right? The revenue and expenses, start to think, employee expense, warehouse sounds like a big one, right? And for the website, salespeople, calling people. So write these expenses. And the way you can do it is always to help yourself understand and help yourself to express easily to people. So for example, what I mean is really make it a story. Make the story clear, easy. So medical, you want to use specifically, like some words, different lines of medical, you can aggregate it, and you can use a generic account category, say, medical equipment sales revenue, and then under that you can be specific, CT, whatever, product measure, like that. So create your chart of account. Okay, that's one of the job. Create a chart of account, which are the income statement, your revenue, and your expense for your business. Okay, so that's one of your homework. And create the balance sheet, which are your cash, your building, your assets basically, and then your liability. Maybe it's a loan. Just imagine for now, okay, like what's your business need. So start to create these line items, and then create a budget of how it look like your revenue. You can start with the first month, or you can plan for a year, right? So you can bigger picture, to think of 10 years, how it look like 10 years from now. And then you come down, 5 years, how it look like. And then you come down 1 year. And then you look down each quarter. And then zoom down to monthly. And then even to weekly. That's how you manage your business and accomplish your goals. Yeah. When you see 10 years, now you see it. In 10 years, yeah, you can accomplish $1 million, $2 million. I'll go IPO. Right? So you think this way. Yeah, start to create your revenue and expense and balance sheet items. So the retained earning is basically, whatever the net income is, whatever the retained earning coming from last year, now you can share between the shareholders as dividend. And after that, whatever left over is the balance of retained earning for this year. Yeah. So basically, these are the major 4 financial statements. You start with the income statement, revenue expense for basically this month, for example, and then the bottom line, the profit goes to the statement of retained earnings. After the distribution, you go to the balance sheet. Okay, and then the statement of cash flow is really a cash basis income statement. So there are two methods. One is called direct method. Basically, it's cash basis income statement. Another is called indirect method. Indirect method is basically a reconciliation of the accrual basis income statement to cash basis income statement. So, for example, the depreciation, it was reduced as cost, so it reduces your profit, but it does not really reduce cash, right? So you add it back. Okay, so these are the reconciliation. So when you start to work on it, you think this way, and it's easy for you to understand. So the income statement, revenue, you have the sales revenue, service revenue, and the expenses. Here you have salary, rent, utility, insurance, advertising, income tax, right? And then total, it's net income. Yeah. So you think you can create an income statement for yourself, right? And you can also learn to create an income statement for your own personal life, right? You probably, you have a part-time job, that's your income, and then the expenses, your rent, your food, your clothes, right? Things like that. So the retained earning is basically the beginning retained earning added net income, and then you subject to whatever you will pay to your shareholders. That's the retained earning balance, and this goes to the balance sheet. So the balance sheet is based on what you have and minus what you owe. That's what your total equity. So that's the basic balance sheet. So this is the asset equal liability plus stock owner's equity. I like to do the asset minus liability equal my net assets. That's the simplest way for me to remember, to understand. So the statement of cash flow, this is a direct method. Basically, here in order to understand it easily, we separate into three categories, all these activities. One is operation activity, which is the actual business. And then the investing activity. Usually these are, investing to buy some equipment or software, something that will last for a while. It's not for operation, but it's like the venue for the wedding, the building, right? These are investment activities. And it costs cash, but it may not be expensed one time. It may be depreciated over time. And then cash from financing activity. So when you need the money to begin with, right? You raise money from your shareholders, and then you pay dividends to stockholders, or you need to borrow money to buy this, $1 million property. So that's the three categories add up. That's the total change in cash. And then whatever the beginning cash is, you add this up, that's the ending cash. So that's cash flow statement. And that's very important, especially for lending purpose. They want to know if you can at least cash flow. Now, majority of small businesses go bankruptcy because they lost the cash flow. Yeah, so that's what I was saying. If you don't understand the finance, you will suffer in life or in business. What I mean is I've seen people, two common mistakes. One is being too conservative, afraid that they can't afford. So they lose an opportunity to buy this house or to buy this business or buy this equipment and capture this opportunity. Okay. One is because they don't understand their finance, they just running numbers in head rather than look at the numbers. So they become too aggressive. they bought too many equipment or too many properties. They got a big warehouse, and then their revenue does not show up, and their cash flow eventually lost, and then they have to foreclose their property. Okay. And then, usually it's like a hit on the 5 years. They lost their credit, and then financially suffer, and sometimes their business suffer, then family suffer as well. Yeah. So these are the things that's important to learn. And then the notes of the financial statements, that's where, as you develop your own business, right? Put some of your visions, your marketing strategies, your branding strategies into the notes. As a part of this business, you're going to raise fund. So the relationship among the financials, as we talk, you start from the income statement and then flow to the net income flow to the retained earning statement, and then the retained earning portion eventually goes to the balance sheet. And the statement of cash flow, the ending cash always tied to the balance sheet cash. Yeah, that's relationship. So if this number does not tie, that means you're not doing this correctly. So the creditors, they really want to look at your cash flow statement. And the investors, and of course, they want to look at your balance sheet, what you have as collateral for your debt. And as you know, when you buy a house, right, you have a mortgage. That's the collateral. That's important. They want to make sure that collateral has enough value to cover your loan. That's why they give you only, like 80% of the value of the house. You need to put 20% down payment. Investor, what's the immediate return? And what's the long-term return? So the immediate return, a lot of times, is just dividends. The long-term return, a company, the biggest value is the shareholder value. Actually, eventually, if you look at assets is that which can generate cash flow. And a business is a business. It's something that will generate cash flow. It's really a cash flow machine. So a business is actually a very good asset. So eventually, when you design a business, you want to have the end in your mind. So yes, you generate monthly income. However, the big picture is because you are able to generate monthly income, you can sell this business for a large amount. And usually, that's 10 times, 20 times of your income. Let's say your business is generating $100,000 a year. You could easily sell for $1 million. You basically get the money for the next 10 years, right? And the investor, they just want 10% rate of return. So they are willing to pay $1 million for your business that's generating $100,000. So now you think about it as an entrepreneur. You could play this game, and your wealth acceleration speed is so much faster. So instead of holding your company and getting $100,000 a year for the next 10 years, you could just sell it. When you build a business, has 2-3 years of steady income, $100,000, you sell it for $1 million. You take $1 million, now you can grow up and build even a bigger, better company. You getting the light? Getting the thinking? Yeah. That will distinguish you from the person who hasn't got the education. That's why I want you to see how privileged you are sitting in this classroom, your aspiration. But if you start to use this knowledge and start to implement it in your life, in 5, in 10 years, easily, depends on where your aspiration is, easily millionaire, easily have financial freedom, and easily making money is not your goal anymore. You want to find something meaningful and contributing to society, right? That's how a great life can happen with the proper thinking and skills. So with that said, I want to pause and what do you see? How you can tie these into your business? How these ideas can support your business? You think you can create your business and generate $100,000, $200,000, $1 million a year, and in 5 years sell it? Now there's a section, tax section called section 1202, and you can write down and Google it on yourself. So it's called qualified small business stock. Qualified small business stock. So qualified small business stock basically says if you have a business that's a C corp, it's a corporation, and if you hold it for 5 years and then sell it, each investor gets $10 million capital gain, tax-free capital gain. Now you started with zero, and if you sell your business for $10 million, you took this $10 million, no tax. That's all yours. Think about that. Right? How much people are missing for not starting their own business? People can work whole lives and making, eventually starting with $50,000 and eventually make $100,000, and then they pay tax, 30%. Right? Now you work for 5 years and sell your business. You pocket $10 million financial freedom. So we have the accounting standard. You have the United States, and then we have the FASB, we have the GAAP. So these are basically so accounting is not like a law, it's more of a practice. So we call GAAP, General Accepted Accounting Principle. Okay. So it's all these practices are over years and years, started from Britain, industrial time. They developed these practices, and then we just refine. And then FASB is called I think it's a Federation of Financial Accounting Standard Board. Again, it's not a government organization. It's like a nonprofit and an industry can gradually learn and perfect. Okay, so these are the principles guiding us. And then internationally, there's a International Accounting Standard Board, and then International Financial Reporting Standard. Okay, so these you mainly developed in Europe, because Europe you have many countries, so they developed these. So in general, we are in the United States, and the United States, is the biggest economy. We kind of have this arrogance. Like we don't care about the international. We just have our own. So usually, we just need to focus on our own, the American standard. And usually, if you're American, when your business go IPO, you go to NASDAQ or New York, and you just follow the fast and gap. So external financial reporting, you need the relevance and faithful representation. So needed to be timely, verifiable, comparable, right? We talked about last time. So ethical. When faced with an ethical dilemma, identify who will be affected by the situation. Identify and evaluate the alternative courses of action. Choose the alternative that is the most ethical. Okay. So when I was in class, when I was a student, my teacher said something. He said, as an accountant, as long as you don't steal other people's money, as long as you don't embezzle money, you will always be guaranteed that you will have food. At least you will have food. Okay. At least you can find a job. That's what was told. And then after we graduate, we hear stories. Oh, somebody was arrested and in jail now. And somebody works in the bank and was caught for doing some funny businesses, you know. So life, you maintain an integrity, and in businesses or wherever you go, you will find the people, and you just have to follow a gut feeling. For me, I've done a lot of work, including auditing, and if I talk to the potential clients, and it sounds like the way this sounds, you know, very aggressive. Even just looking at how they address or how they decorate their office, you kind of smell something, and you say, okay, I'm not gonna work. It's better to just walk away sometimes, okay, rather than getting into it. And sometimes people will lure you by paying you extra money, you know. So it's really your own thinking yourself. What your value is, and keep yourself grounded. That's the ethical dilemma. If you think something will happen and it will go to the newspaper, you think about that second and don't do it. Or making a decision that's important. So I was working for a nonprofit organization, and we were so our mission is to help people to buy homes because we believe home ownership is like a sure way to financial freedom, especially for people, you know, first generation immigrants who are not homeowners. They come to this country and we help them to buy a home so that you know, the homes will increase value after 30 years, and when they sell, they have retirement and also they help their children. So we also own a building that's in Los Angeles. So the city of Los Angeles had these old buildings, like very, very old buildings, and they give to us. They give one profit to us, and so you know, we thought we were nonprofit. Whoever give whatever to us, we receive it, right? So we were renting out, but the CFO at that time, he and I talked, and the CFO said, "Look at Jinhong, this is not an asset. This is not assets. These buildings can have fire accidents, like very, very prone to fire accidents. These older buildings, they are wires. I think it's like it's not wrapped with plastic. It's like you know, just the wires in the wall. So it's very easy to have fire. So he and I talked, and we said, imagine you wake up in the morning and you see Los Angeles Times, you know, this nonprofit organization. a slumlord had a fire and it caused 10 people died. Imagine. So we made a tough decision. We convinced the board and we said we will sell this property. Okay. And it's not even critical to our mission. So we sold this property. And we made like $1 million money in which we were able to use it as a down payment and bought a new building as an office. So that's how we make a decision like that. So ethical decisions, you always want to think about carefully and strategically. And that's very important. Your trustworthiness and your credibility, your reputation is your biggest assets. It takes long time of consistent hard work and integrity maintaining it, but it takes just one incident to destroy it. Okay, so you make the slow but solid money through outright, not try to make quick, easy money. That's where the trap is usually. Yeah, so that's something I want to share. Especially somebody, tell you this is something really big, it will make so much money, so quickly. Think again and just tread lightly. Make sure you're not stepping into a mine. So with that said, any of your business, do you see potential ethical issues that you may run into? I think yours, the fly, probably safety is number one importance. All you need is one accident to destroy your reputation. So you do not want to compromise in safety section, right? You follow procedures. Yeah. I flied with my friend Brian. He spent a half hour just screwing every screw of the airplane before he fly. And I said, really, Brian, are you sure you needed to do that? It looks perfectly fine to me. He said, we have to follow procedure. When you're in the sky, it's too late. You can't have any loose screws. The wedding business?
Well, if we're renting out equipment, whatever that may be, it'd be important to, if those people who are renting them don't know how to use it, sign a waiver or something like that, so they don't injure themselves.
Yeah, proper training. Yeah. Want to cut short on that. Make sure you allocate some budget to that. Thank you. Medical device?
I remember when I used to work there, we used to get things from hospitals that we weren't allowed to sell. It was like illegal. And, yeah, we weren't allowed to sell them. That could be like a ethical situation or like an issue.
Yeah, probably some.
But we used to sell them in Mexico.
Oh, okay. That's a good idea. Yeah, there are different regulations.
Right.
Yeah. No, that's where the opportunity is. As long as you know this equipment is not going to be harmful, right?
Yeah.
You make sure this equipment works. It's not going to injure anybody. And then regulations, sometimes US has more strict regulations than other countries.
Yeah.
Other countries probably don't have that. You just by selling this equipment to them, you're saving their lives. Otherwise, So that's a good idea. Yeah. For the sports training, what do you see potential ethical issues, Elia?
I believe for us, like, we're not all on the same page, like we mentioned before, like we create a brand. I'll just throw Nike out there, like they're just do it. If we don't all follow that, we're all going in multiple directions. I think that would be a big problem.
Sure.
For us, but we all stay on the same page.
Mm-hmm.
That's
Yeah, very consistent, consistent behavior of your coaches, right? They're dealing with kids, like you want to make sure they don't say things that will hurt the kids or like that. Yeah, definitely. Good trainings. Yeah. The rock climbing gym, what do you see any potential ethical dilemmas that you may face or make, tempted to cut corners?
There's like lots of injuries that happen,
Mm-hmm.
like lots of pulled ankles or broken
Mm.
bones,
Mm.
maybe something like that, like making sure everybody signs waivers, and like skip out on that would be bad.
Mm. And what can you do to prevent these injuries? Proper training?
Yeah, making sure everybody signs a waiver and training front desk people to be good at
Mm-hmm.
people.
Sure. Yeah, I think, waivers as a customer, yeah, waivers, I got that. You don't want to be responsible. You want me to be responsible. But I would appreciate like you properly train me, right?
Yeah.
Guide me. Probably that's what would distinguish you. Yeah, I would appreciate as a customer. Yeah. Good. So probably you want to, in terms of budgeting, allocating, right? Trainings, hiring qualified coaches to be trainers, that part. And don't I I really don't like to compete on price. I would rather do good job and reputation and attract, good clients coming from abundance. So like my CPF, I retain clients, high income, high net worth. I can create a good value for them because I believe that way, everybody wins. And let the low price seekers go to HR on the block. So you don't want to compete with Walmart. You want to be somebody, especially when you're small, right? It's harder to compete on price because price usually requires a scale. So when you're small, you probably focus on quality, safety, quality, something that will really distinguish people like personalized service and that. That's what you can afford. That's what you can do as a small business. Mm. Okay, so public companies means really it's go IPO, right? That's the bigger goal, 5 years, 10 years goal in your business. You want to have that thought. And public company again, it's really you are getting the money now instead of for the next 10 years, and that will help you to expand, or you can exit, sell the stock, and do something else. So that's a bigger picture. Um, the pro, because of time, I'm not going to read these, but you can scan through it. It really helps you to raise the money, and then you can exit and do something else. The con is there's a lot more reporting, and very timely reporting. Uh, so if you look at timing is very important. By mid-February, you need the press release, and by end of February, you need to file the report. That's very important. So the key here in accounting system, few things in practice. You want to design your chart of account in a way that can tell the story and easy to understand. And also design the chart of account to match the tax form. So if it's a C corp, the tax form is the 1120. Try to match these, same items. And then the other specific business specific line items. So this way everything is consistent and you can generate report quickly. And then also, I like to have categories, and then we have specifics, because the more specific, the easier it is for the accountant to book. Right? There's no judgment call. But you want a categories because as an executive, you don't want to know details. You want to see the category level. So for example, employee benefit, that's the category. And then under that, you can have works comp, health insurance, vacation time, life insurance. But all these can be categorized as employee benefit, right? So the executive can just see this one number, and then the bookkeeper can look at the details. And then if your CFO, want to know the details, you can see the details. So that's how you design your chart of account wisely. Okay. And then, of course, you choose data visualizations. You can have different kind of charts to present, because we are all visual. So if you look at the revenue increase this year, next year, next 5 years, you probably want to have a bar chart, right? Or a line chart. It shows the trend. This pie chart is also very easy to use. So you have different customers, say your flight. You want to know who are your customers. Some are business executives renting it, or some are just professionals. Some are business owners. You have different categories, and now okay, who are your main clients, and you specifically targeted these in terms of marketing, right? Promotions. So. Yeah, I've never used these. Yeah, these are very rare. Okay, say if your medical device you want to expand nationwide, you can create a chart like this. Now you see, okay, maybe I should have a head office in Dallas. That way I fly to both sides in 2 hours. Right? Yeah. So there are homeworks like this in Canvas. So you can just practice on these, okay? When it should be very easy. Yeah, so this one, it's basically amount owed to suppliers. You can just list, okay, owed to suppliers, that means accounts payable, right? Designer brand's right to collect account, okay, collect account, that's accounts receivable, okay? So start thinking that, and you can just draw it out like this, right? So some of these things, you just need to practice in the homework section to make yourself familiar, yeah? And then when we have final exam, you can easily do these. Yeah, and then you can create a chart account, create a financial statements easily like this. So yeah, these are all the questions in the homework section. You can really do it. Like this one is very easy. You have a total revenue minus expense. That's the net income, right? Total asset minus total liability. That's stock equity, right? So these are basically, elementary maths, okay? Add and subtract. So you can play with these. And this one is really good. There are homeworks like this in this called critical thinking. These numbers, as if one person is making a lot of money, but if we really chart them out as in the balance sheet, you see, the one making a lot of money may not be the one who's has a lot of actual money. So it's a good way to practice. And it also helps you to make decisions in life. It's not necessarily how much money you make. It's eventually, how much money you keep. Like this one, this person has less money, but also has less debt and actually has more net assets. Yeah. Okay. Well, right on time.